state of the cedi in 2026, especially given the positive macroeconomic indicators we are seeing?
Yes, so in 2026, what the data is suggesting is that, we are seeing slight depreciation of the cedi, and as at now, things are depreciated by over 8%, which we must be worried, okay, because, if you look at the macroeconomic front, and we are doing everything right, but it still looks like the cedi has come under pressure again. And I think the title for today's discussion is on the right path for us to unravel why, despite all the good numbers we are seeing, in fact, increasing our reserves to about six months import, and we are still, and if you look at even the first 5 months, we have recorded serious trade surplus. In fact, if you look at our trade surplus up to April from Bank of Ghana, you realize that we made a surplus of about $5.6 billion. So clearly, you can see that it's not really about, import exceeding export that is driving the depreciation, but it's looking like some underlying structural issues that you have still not resolved.
I see. Some people actually say that we are probably expecting too much from these indicators in the short term. What do you think about that?
Okay, so you see, the issue is that last year there was a lot of direct intervention in terms of our exchange rate, management. And it looks like this year, the Bank of Ghana is trying to allow the market to price, our exchange rate to see whether we are indeed strong as our numbers suggest. So I think for this year, I don't think it's going to be a short-term issue, or maybe the macroeconomic numbers, we are expecting so much from it. But still, there are some structural issues that, today we'll be diving into, so that you appreciate the underlying structures that we have not changed yet, which if we don't do something about it, this cycle will continue without Bank of Ghana direct intervention.
I see that the baby also wants to join the conversation. But anyway, John, so, some people would say that, then what is the point of all of these good economic headlines if the currency is not responding? What do you have to say about that?
Okay, so you see, the issue is that when it comes to, exchange rate issues, especially when you are trying to drive your exports to get a lot of, dollar inflows. And that's what we have done, especially gold inflows. That has really helped us, overcome the challenges last year. But the issue is this. I think, Mr. Hammond, the major issue is this. One thing I've realized is that, you see, in this period, normally we see a lot of companies in Ghana repatriating profit back to their investors. And one fundamental issue about economy is that is more of, foreign dominated, to the extent that we even have a lot of major companies driving our exports being foreign owned. What it means is that after we record the best numbers of exports, most of these monies will go back to, the foreign investors, and it will demand that you change cedi to dollars to pay them. And again, you also realize that most of our services are normally given to foreign, companies. And when these companies come and do their work, definitely they will send the money back. So it is more about, you see, we making effort to retain as much of the exports that, we get. But I think currently it looks like most of our exports earnings are repatriated back to foreign companies. And that will suggest that the cedi will still come under pressure if you don't do something about it. If you look at the gold, the extractive industry, you realize that there's a foreign company that are dominating. So all the good export numbers that we are seeing, they will repatriate these monies back to their countries, and that will put pressure on the cedi. So unless we you see, we locally owned our economy, where we allow our local companies to dominate, most of these sectors, and find way of, making sure that foreign companies, are even like all the companies in Ghana are using local services. If we don't do that, and we are only concentrated on net export, and that's why I've been cited an example like for the first 4 months, we have recorded about $5.6 billion net export, which means that we have a lot of, we have exports exceeding import that should cover all these things that will not bring any challenge to our city. But as far as, whatever is driving the economy is foreign owned, we cannot get there where, we can see a lot of city stability and appreciation happening again.
I see. So that is one of the issues. The how do you call it? Is it capital? How do you call it?
Capital flight.
Yes, capital flight. Exactly, yes. Capital flight. So that is one of the reasons. One thing too that we see, I don't know whether it's a demand and supply of it. How significant is foreign currency demand in explaining what we are seeing? With the city.
So currently, what is happening is that you see, most often companies normally finish their annual reports by March. Okay, and then they have to repatriate profit back to, their investors.
Yeah.
So if you have an economy where, these sectors are largely owned by foreigners, what happens is that they will have to change whatever they got into dollars, and that will demand that, there will be pressure to get forex. Okay, so when that happens, clearly it's going to push our currency down. And I think again, Bank of Ghana does not want to do a lot of direct intervention this time around, because I think they have a target to also build their reserves. So what I'm seeing is that, the pressure coming, Bank of Ghana is not really directly intervening in terms of pumping the dollars to make sure the cedi is stabilized, because they want to also build reserves. Remember, we even sold some of our gold. They want to build all these reserves back, so they have relaxed.
Hello, John. Okay, I think I lost John there. Let me try and see if we can reconnect him, and then we can continue the conversation. But yes, this is a business breakfast on Z101.9 FM with me, Nitra Bihamon. This morning we're talking. Okay, I have John back on the line. Hello, John. Hello. All right. So this morning we're asking a very important question about on why the cedi is still under pressure despite the macroeconomic gains that we are seeing. John, do I have you on the line?
Yes, okay,
I'm
on the line.
Yes. So you're making a point, and you said you were talking about the fact that we need a lot more. Most of the companies need a lot more dollars to be able to do their stuff, and that's why we're seeing the pressure that we are seeing.
Yes. So I was saying that, yes. So clearly, you see, the year has come to an end. Annual reports have been filed. And I don't know if you remember, a lot of companies have declared dividend. GCB has declared dividend. A lot of companies are paying dividend. A lot of companies are repatriating profit back to their countries.
Yeah.
So once there's a lot of demand for forex, and Bank of Ghana is not really, because they want to build their reserves, they are not directly intervening. Clearly, there will be pressure on the cedi. So personally, I think, for us to get there, where maybe the cedi will be more stabilized and all the macroeconomic gains that we are seeing will translate into longer term stability, we really need to change the whole ownership of our economy. And I love the idea that, we are now pushing for the local people to own major part of the economy. Now we're seeing the gold sector. We have local entrepreneurs, trying to own big mines. Okay, I think we also discovered something called, there was recent mineral that we discovered. I think I've forgotten the name, but I think those ones we should make sure, we should have a clear policy that we want our local entrepreneurs and businesses to own major part of our economy. And that is what is really going to ensure stability.
I see. So a major part of it is a demand, right?
Yes, it's the demand. But the demand for forex.
But the demand
normally at this time.
Yeah, but the demand for forex is not just about the foreign companies, is it?
It's not really about the foreign companies alone, but they are the chunk of it. If it was just about the import, Bank of Ghana is well positioned to meet the demands of these importers, and they have done the calculation already. So that's not really a big deal, but there's a particular area that you don't really have too much control. So like those areas, you don't really have. So for example, if a foreign company want to repatriate all their profit back to their country, you can't stop them. Are you getting it? As for import, based on the import numbers, you can, approximate the dollars that will be needed. So you can push that to the economy based on the surplus that you have generated. But the major one driving, and all those things were anticipated. They have anticipated it and they knew whatever was going to happen. But there's the other side where maybe those that owned the foreign companies that own majority of our economy, you don't have too much control in the actions they take. And that is a very worrying situation where we need to really find a way to address.
I see. All right. Now, still on the demand issue, now you and some other analysts actually often point to the high demand for dollars. But some people say that if demand is always the excuse, then nothing will ever change. How do you respond to that?
Exactly the point. And that's why I think I made a point that it's not really about, you see, there have been this false narrative that, Ghana is import dependent, which suggests that always our import exceeds export. That's why we're experiencing, and they use that as a demand driven to explain the situation. But you see, from 2020 up to now, Ghana has been recording serious trade surplus. So if it's just about demand, our import exceeding export, then that would have solved our depreciation of the cedi. In fact, if you go back to 2024 and you look at the economic numbers, you realize that in 2024 we recorded serious trade surplus. At the same time, the cedi depreciated significantly by about 25% for the whole year. So it suggests that it's not really about, demand, but it's more about the structural nature of your economy, where you have allowed foreign companies to dominate key sectors that drive exchange rates. For example, the gold sector. For example, if you even look at the cocoa sector, because of cocoa board and the rest, you see, we're able to accumulate exactly enough, foreign exchange from that side. But if you go to the oil sector, look at the oil sector, the people who own the oil sector. We have tallow oil. We have all these companies are foreign owned, and they have the huge numbers in terms of, the inflow and outflow of, dollars. So once you are not really owning, those critical areas of your economy, and you're allowing foreign investors to dominate, these places, there's no way you are going to have a longer term stability as far as you're managing your economy is concerned. So we should be very deliberate. It's that I don't believe it's about the demand issue. It's more about the structural issues of the economy, which we need to strategically deal with it without, making it, too open.
Hello, John.
Yes, I can hear you.
So are you saying, so what exactly, when you say we should deal with this strategically, what are you calling for?
So what I'm calling for is that there are some critical sectors that governments and Bank of Ghana and all the regulators should be deliberate in promoting local investors and local entrepreneurs to own that space. You see, there are some sectors that are cost intensive. Something like oil and gas is very cost intensive. You see, gold, those extracting is very cost intensive. But these areas are the critical areas that normally drive these forex. Look at even Ghana, our telecommunication sector is owned by MTN. MTN is, a South African company. No, so there are some critical places that there are a lot of inflows which is not really locally owned. So we must be deliberate that there are certain things that we are going to allow the local companies and local investors to dominate. Again, another issue is that you see the service sector. Most often you realize that we are always in hurry to seek for, foreign-based services. In fact, there are a lot of companies in Ghana that have to get expatriates to do a lot of their works. Sometimes it's even intentional. They just shun away local services and go for foreign. But all these things are driving, our exchange rate movement. So if there's also a deliberate policy that if we're a company, you must get all your services locally. In fact, maybe 80% of your services locally. If maybe they feel our education is not set up good enough for them to get that required skills, then our education sector should also be reformed to meet the specific needs of all these companies that go out there, get expatriates to work for them, and then give all the monies to them, and they go back. That is not going to help us in the long run. That's why we must be deliberate from an educational point of view, for services acquisition point of view, and make it clear to every company in Ghana there are services that Ghanaians can provide. And you will not be allowed to get expatriates to work on that. If we're able to get these two things done, one, championing our local investors, entrepreneurs to own the major extractive sectors in our economy.
Hello. Okay, I think I lost John again. Let me see how we can make sure that we have a very stable connection for this conversation. Yes, but if you just tune in, this is Business Breakfast on Z101.9 FM with me, Trebi Hammond. This morning, my guest is John Chehi. We're talking about why exactly the cedi is still under pressure despite the macroeconomic wins or gains that we've experienced this year. And John is trying to explain that a major one is the fact that we have so many foreign companies in our very key sectors, and what happens is that when around this time of the year, there's what we call capital flights. They send their profits out of the country, and that affects the exchange rate movement. And he says that is one of the major things that is affecting the currency, and he's giving us some solutions as to how we can be able to deal with that. I think I have John back on the line now. John.
Yes, please. Yes, and thank you for having me back.
I keep losing you. Yes, but you are making a point. Yes. You can continue.
Yes. So I was making a point about the service sector also. And I think I was making it clear that, you see, going out there to procure expatriates, also leads to, capital flights. Because, when the expatriates come and you pay them, they have to convert to dollars and go away. And all these things put pressure on our city. So there should be a deliberate policy. And for that aspect, maybe most companies in Ghana believe that in terms of maybe local provision of services, we are not up there. Then we should be more strategic in making sure our educational sector is reformed to train people to meet all the demands of companies in Ghana that demand expatriates to work for them. I think that's even going to create employment, and that's really going to retain a lot of money into the country. Because that's why I said we can't continue to blame import over export, because the numbers do not support that narrative. What we need to do is that it looks like there's some leakages, or let's say, I would say there are a lot of leakages driving the monies we are earning even from export back to foreign countries. And that is where we have to tackle, so that once we stop those leakages, then we will be more strong to defend our currency.
John, it appears to me from the conversation so far that is the only problem. That is the biggest problem causing the performance of the cedi. Is that what it is?
Yes. So you see, as far as we are seeing trade surplus, clearly, as I said, it's not really about this import dependence narrative again.
Right.
There is more of structural issues of the economy. And every year, you can look at the past years, you always realize that from January to May, then to June, where these profits are are sent back to the foreign country, then you see a lot of pressure on the city. And when that happens, then there's a lot of doubt, and that also brings speculation in, and that drives the city more downwards. Because now people will believe that maybe something is happening, but it's possible that there's not really anything happening. But because of speculation and all those things, then it drives the city down further. So we need to resolve this problem. And I think that's why I love the case that we are now seeing government deliberately pushing some local investors and entrepreneurs to enter into some spaces. So I think there was a mine taken over by a Ghanaian investor. Maybe I also learned about Takwa. The telecommunication sector, we must support our local companies to own these areas. If not, we will continue to suffer this problem that we are experiencing.
All right, John, hold on for me. So exactly 20 minutes to the top of the hour. This is Business Breakfast on Z101.9 FM with me, Trebi Hammond. This morning, like I said, we're talking about the performance of the city and why exactly we're seeing a lot of pressure on it despite the macroeconomic gains that we're recording. My guest is John Che. You are free to join the conversation. Send us a WhatsApp on 0544321019, 0544321019, or you can call us on 03039566641, 03039566641, and then we'll give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. Please drop a comment and we'll read them for you as well. All right, John. So what other problems, what other structural issues are leading to the performance of the city currently?
Okay, so another issue has to do with our debt servicing. You know, because we also have huge, debt, external debt, where we are supposed to pay interest. You see, remember in 2025, because of the agreement we entered into with our creditors to postpone payment of interest and all those things, we realized that that aspect was not really affecting us. But now we have resumed payment. We have resumed payment of these interests. We have resumed payment of these debts, the external debts that we borrowed. So once you have, started paying these, and these amounts are normally huge. They are not small amounts. So once you start paying some of these debts, then that is also clearly going to, affect your exchange rate. One thing we need to appreciate is that we must see exchange rate as like a normal product where demand and supply is a factor. So any issue.
Hello. All right. Hello, John. Hello.
Yes, please, can you hear me?
Yeah, I can hear you now. Yes, you were saying that we must.
So I was talking about.
We must treat it as a product.
Yes, we must treat it as a product where anything that will drive demand will cause, the currency to depreciate. Do you get it? So what it means is that, we need to, anything, that is going to happen in 2026, that is going to lead to demand for dollars will definitely, affect the exchange rate stability. And there are clear indicators from Bank of Ghana that the way we were aggressive last year, we are not going to be aggressive this year because they have seen the cost of what they did, leading to serious losses. And when we also made it political, they need to defend themselves to prove that it's not like they are just there making losses. They can also make profit. And so, they are also being reserved a bit in terms of their intervention. And once all these payments are coming in, then likely the city is going to depreciate. And then there's also one major issue that we have not really tackled it in any way. You see, always we are talking about capital goods. We are talking about, I don't know what we can really do. I don't know if Ghana, we can also produce machines in large scale. We can, because you see, even when we talk about industries, we said, industrialization. Can you imagine that most of the things needed for industrialization are also imported? Most of the things, like you set up a company, you are importing the machines, you are importing. I don't know if we can get to that point where we can also, do it our own. I'm really struggling to understand why we can't go into, production of these equipment that we normally import. Because some of them we have the raw materials. We have the raw materials around. So we should be able to, produce some of these machines to reduce our import costs in those areas. And then we have to also be a bit strategic in terms of things that we can do ourselves. We need to find a way to support. You see, sometimes some of the things, maybe it's not, there's no incentive for local producers to go into it. And because maybe the foreign companies have already done it in a large scale, they're able to get it at a low cost.
Yeah.
So if you don't have government, if you don't get government direct intervention, you are going to really struggle. Because you produce it, you can't even match the quality. And one thing is that we have not banned, the import of some of these things. So you cannot match the quality. And you're also getting them at high cost. Even financing is also another thing. Huge finance costs. Now that we are seeing the rates trending downwards, which I'm hoping will get to a single digit. But, all these things need to be solved in order to push the industrialization agenda. For us to also, not just the raw materials we have been exporting, but we also start like the way gold board, they now have gold jewelry. We need to do it in large scale. Cocoa processing company. I've seen, government deliberate action to revive the processing company. We need to do that because, research has shown that if you look at those sectors which have about 100 billion, those into the raw materials just get about 10% of it. So most of the things we can, once we have the resources, we should be able to, get things done and improve our export. And that will go a long way to make our economy more resilient.
Right. Well, talking about we actually doing certain things here instead of sending raw materials. Now, yesterday, the president actually announced that Tema Oil Refinery will begin processing Ghanaian crude oil this month, yes, as part of their efforts to increase local value addition and all of that. So maybe that will give a little hope, Anna.
Right? Yes. And it's very important. You see, the issue is that, there are a lot of, for example, even crude oil. If you look at the price of crude oil and look at the price of refined crude, clearly there's that huge gap there. So clearly, if we are getting the crude oil here and we can process it, that is going to really give us a lot of value compared to just, exporting just the crude in its raw form. Normally, those ones, the cost even related to the export is very high. It's not even just about the just exporting, but sometimes even the cost of exporting, because they are in their raw form and there's a lot to do with the supply chain issues. You incur more costs. But if you're able to process it and get the finished product, you can get more value and reduce cost of transportation of these items to other countries to sell. So it's very critical that, especially the Tema Oil Refinery, make it really work. Really, really work. It should be able to even, process about 80% of our crude. And there are a lot of countries around us that need it urgently and need it significantly. So if we're able to do it, it's going to help us. Look at our electricity situation. When we're able to stabilize our electricity, we're able to export them to most of the neighboring countries around. Burkina Faso, we're exporting electricity to Burkina Faso. So if we can get this also going, we can export them to these countries and gain a lot of benefit from that.
All right, John, let's try and see if we can touch on a few things and then we wrap up. Now, one of the things that we've seen also is a gold strategy. Now, the Bank of Ghana's gold reserve strategy, is, people describe it as a game changer. But some people also say that it only provides some temporary breathing space. Where do you stand?
Okay, thank you. You see, the issue is that gold is a very volatile asset. And therefore, relying on it entirely to push your economy will even make your economy more volatile. It will even make your economy more volatile to some of these shocks, even more. Okay. Because gold as an asset reacts to everything that happens. And mostly, it reacts to global issues. it's not really about your local issues that gold will respond to in terms of the pricing. So once you are relying on gold, then you're even pushing yourself more into a more volatile state, which you don't really have any control. Let me give you a typical example. Gold was just around $2,000 in 2024. In just 1 year, 2025, it moved to about, 5,000. And it's also possible that gold can move from the 5,000 back to even 3,000 with any incident that's happening at the global stage.
Right.
Now, because of wars and a whole lot of things, they see gold as safe haven. What if the wars end? And then that means that demand for gold is going to reduce a bit, and that is going to affect anything you are getting from gold. So I don't think gold can be a total game changer for our economy, looking at its volatility. And so we need to, that's why I say we need to, the structural issues of the economy need to be dealt with. The things that I've already mentioned need to be dealt with. We must own our economy. You can't go to US and you see 80% or let's say an area of the economy being managed by foreigners, like 50%. It will never happen. Strategically, they will not. They will even see it as national security threat. Right. Are you getting it? That's how they even see some of these things as national security threat. And they will stop you. TikTok in US, they have made sure that it's not owned by Chinese.
Yeah. I see. John, so very important. I think the point is well made.
Because they know their potential. Yes, so you have to be forceful in some of these things.
I see. All right. Now, there's an issue also about the psychology in all of this. I want to know how much of the cedi's movement today is driven by psychology. And by that I mean maybe fear, speculations, or expectations.
Yes. So you see, I always say that most of the things around the world are moved purely by, perception and psychology. And that is why it is very critical, especially in terms of the communication from Bank of Ghana, government, in terms of these things. Because any misstep in the communication will lead to serious negative perception. Yeah. And that can seriously affect, some of these things we are talking about. So we need to be very measured in the way we communicate around the intervention into some of these things. I normally love it when you do it at the back where people are not seeing. But when people realize that you are being aggressive, you are being scared, maybe some of your commentaries you are giving suggest, the thing is going to be long, a whole lot of things. That creates, a lot of, bad perception. And the speculation is a serious threat to any exchange rate regime. So we need to be very mindful of the things that we communicate, especially the ones that come from the regulator and the one that comes from government. They need to be very, very careful. And analysts also, we need to, it's our economy. It's our economy. So that no matter the political benefits we tend to get from, certain projections, we need to also protect our economy. We must see our economy as our bloodline, our number one. So even we analysts should also be careful in terms of, what we communicate to the public about the current, economic numbers. Because that could also send some wrong signals, especially coming from the opposition. People who normally speak a lot of things. So we all have to be a bit careful and allow the economy to move in its natural state, and then we all benefit from it.
All right. John, two more things and then we can go. So maybe my major question or my okay, I don't want to describe it in any way, but so if the cedi remains under pressure despite the good economics we are seeing, all the conversations we've had so far, who bears the responsibility? Is it government policy? Is it businesses or external forces?
See, for this one, I will really blame everything on government.
Okay.
Because, government policies is what normally drives everything. And I think I've even really explained the structural issues that you need to deal with. If you want long-term stability, and we don't want a lot of intervention that costs us so much. So, I mean, government is the highest spender, and government can do everything. I mean, I believe in government; they have power to do everything. So they must marshal their powers to the benefit of the economy by, I mean, solving these structural issues that I've mentioned. If we're able to resolve it, let local companies own, I mean, major places of our economy to reduce this capital flight. In terms of services, we allow local companies to, I mean, control. I'm sure some of these things we will not discuss it next year. But Mr. Hammond, I'm telling you that if you don't do anything about these things, next year we'll come back and we'll still have this conversation.
So would you say that we are not close to currency stability at all?
We are not close to it at all because what has happened is more of intervention. So we have not gotten to that state that where naturally the economy will move in a stabilized state. So it's always about Bank of Ghana intervening, and because they are getting a lot of, I mean, proceeds from gold exports, they're able to pump in to meet all kinds of demands. So these things are artificial interventions. So until, I mean, we've solved the very structural issues that is happening, we have not reached there yet.
All right, John, thank you very much for your time. I'm really grateful. It's been a very insightful conversation, and you've spoken about extensive things. I mean, you've spoken extensively about some of the key things, and I'm really grateful that you made time to join us.
Thank you too. And I think my baby worry you a lot.
Oh, no. He didn't worry at all. He was also making his comments, which is very, very important. Thank you very much. All right. Please do enjoy the rest of your day. Okay. All right. So that was John Che. John Che is a financial analyst, and he joined us this morning. We've been talking about why the cedi is still under pressure. And he says that there are several things that are causing that. You know, the narrative is that usually we pay attention to the imports. We say that, oh, Ghana is, I mean, the problem is our exports. I mean, the problem is import. We import too much and all of that, and that is the whole thing. But he tells us that it is not just that. The real things that are actually causing the cedi to feel the pressure is capital flight. He talked about debt servicing. He also talked about profit repatriation and service imports. These are very, very important things that he's speaking about this morning. Feel free to visit our social media platforms. We're on Facebook at ZFMGH and on YouTube at Z Multimedia. You can visit and go and play back this particular conversation. It will be put on the YouTube channel. So head there and play back and just understand exactly what is happening so that you can know where to hold our leaders accountable properly. And so, yes, that's all for today. We'll be back again tomorrow for some more interesting conversations. Until then, please keep listening to Z101.9 FM. My name is Trebi Hammond. I'll see you tomorrow. When you think Ghana, think Z. Up next is The Brighter Side with Jeremy Okorie Amwako. Keep listening to Z101.9 FM. Bye-bye. I'll see you tomorrow.